We've talked about what is an offer in compromise for doubt as to liability. That is the IRS's settlement program when you owe back taxes. But let's go into how you could go ahead and get the offer in compromise. There's two rules that you need to follow. One is you first need to qualify for an offer in compromise. Now, common misconception is that you just offer the IRS an amount of money and see if they go ahead and take it. No, it's actually a formula. So there's a qualification formula. Do I qualify? That answers the question, do I have the ability to pay the IRS the amount of taxes that I owe? Well, that's the first question. The second question is, what do I offer the IRS? That is, what is my reasonable collection potential? What should the IRS accept to go ahead and settle my back tax bill? Now, this is again is a formula. You can see the formulas right there on your screen there. The qualification formula basically is you take your equity and assets and you add what the IRS would go ahead and collect in monthly payments. Now, the IRS has got 10 years to collect, so that monthly payments is called monthly disposable income, or MDI, right? So that's what the IRS could collect every month, and they can collect that all the way up until the collection statute expires. Now, if this equity and assets plus what the IRS could collect in future payments is less than what you owe the IRS, then you qualify, all right? But that's just step one. The second step is how much should you offer them? And it's a different net equity and asset computation. The IRS does allow some assets to be excluded in the offer amount, but it also adds some of your monthly disposable income and the additional expenses. Now, the equity that you have, less the exclusions, plus what you would pay the IRS likely in 12 months, add those two together, that is your offer amount. Well, this sounds kind of complicated. The best way to go through it is through an example. So here's a really, really simple example. Now, first one, do I qualify, right? This is step one. And let's say you have $5,000 of net equity in your assets, and you have to go compute that. And let's say your monthly disposable income, your MDI, is $200 a month. And let's say that you submitted your offer application and you still have 72 months or 6 years left on the statute. So what you could pay the IRS ultimately before the statute expires is that $5,000 and 72 months of $200 payments, or $14,400 in additional payments. The total ability to pay there is the sum of those net equity and assets plus those future monthly payments, which is $19,400. Now, let's say you owe more than $19,400. In our example, $50,000. Right? So your future ability to pay will never pay the IRS based upon your current finances. That means, yes, you qualify for an offer in compromise. Now, is that what you offer the IRS? The answer there is absolutely no, it isn't. Now, we're going to assume here, and take a look on your screen here, of there's the qualification amount, how much you should go ahead and offer. Now, we're going to assume the net equity and assets and monthly disposable income are the same for the offer amount and the qualification amount. But instead of offering the IRS 72 months of future payments, you are able to go ahead under the offer and compromise rules and only offer those the IRS 12 months of those future payments. So here's someone with $5,000 worth of equity and assets, could pay $14,400 in future monthly payments, but the IRS is only going to require $2,400, which is $200 a month times 12 months. So your offer amount would be $7,400. So you get that. You owe $50,000 because your ability to pay is only $19,400. You qualify for an offer in compromise, and your settlement amount would be $7,400. Obviously, the details here are very important. How do you determine net equity and assets? Do you know your collection statutes? If you have multiple years, that can go ahead and complicate that. And then, of course, what type of offer and compromise do I take? Do I take the one that gives me 12 months versus 24 months? If monthly disposable income is material, then obviously you would lean towards the 12 months. They have different payment rules in there. And again, can you pay that offer amount, right? So all these are computations that go into both qualifying and how much your offer and compromise is.